we have very few tools. I told you, we only have tighten or loosen.
Yeah.
The only way that you could generate deflation for the economy as a whole is to tank the economy. And even the Great Recession, there was virtually no deflation. The only episode of real deflation we had is the Great Depression, which I don't encourage.
No.
You know, I don't recommend.
Yeah, that's the thing.
So what we want is for income to grow faster than the price level. And lately that has been happening. There was a period, as everyone knows, where that didn't happen. And so we come to the close of 24 with a little bit of uncertainty, I would say. That the long arc, we've made clear progress in getting inflation down. To me, that feels like the path to 2%. The unemployment rate and all the various measures that one could have of the labor market suggest we didn't crash through normal. We went from way overheated to something like sustainable full employment that I'm hopeful we can settle down there. But if your inflation gets close to target and your unemployment gets close to where you want it and the GDP growth of the economy is coming back to something like trend, but the interest rate remains well above where you think it needs to settle, you got to be careful, because it's like filling the bathtub where if it's too hot, you could drop ice cubes in there. But if you get it to the temperature where you want it, stop dropping ice cubes in it, or you know what's going to happen.
Is that where we are right now?
So that feels like where we are. And so that's why I said over the next year, it feels to me like rates come down a fair amount from where they are now. But we meet every 6 weeks because the conditions change, and you know we're back at it, Sisyphus and the rock.